David Kudla, he does this stuff for a living. He's the founder, chief executive officer, and chief investment strategist at Mainstay Capital Management, joining us from Troy, Michigan via Zoom. David, what do you make of today's action in the context of what we've seen over the last 2 or 3 weeks, which is a little bit of a pause in this market?
Yeah, good morning, Paul. It is, it's very encouraging. And actually, it was NVIDIA's earnings report last night or yesterday afternoon, beating on revenue, earnings, and especially the guidance. It was really an exciting earnings report. And that's really what everyone was waiting on. We had from the highs in October, the S&P 500 through Tuesday off about 5%, the NASDAQ off about 6%, started with the December rate cut that had been priced into the market. And then it looked like they weren't going to do it. We look at the odds on what's happening with the cut. And then investor sentiment kicked in. And it's incredible how sour investor sentiment turned when we're only 4 or 5% off the highs for the market. But it was key because if NVIDIA wouldn't have come through, I would have expected the markets to go down another 4, 5, 6%, actually.
Yep.
And that was just such a strong report. I think now, we saw it in the futures last night, off hours trading last night, after hours trading, and we're seeing it today. I think this sets us up well for the rest of the year. In the non-farm payrolls, when we net that all out, we think that leans towards a December cut, and they don't have much more data between now and the next meeting.
Yeah, just kind of wanted to go to that, David. We kind of got that change in non-farm payrolls, and I guess you can see what you want in there. The September numbers came in better than expected, but the revisions were noticeably weaker. So you could go either way, presumably, and the market kind of reflects that, maybe a 40% chance of a rate cut in December. So how do you think they will proceed?
It's getting more difficult to tell because there's there's dissension, right, within the FOMC, within the Fed. Dissenting votes. So we'll have to see. But I think that, this data, which is very important, a doubling of estimates on actual non-farm payrolls for September. But as you said, August revised down, 4,000 loss, continuing claims still running very high, and unemployment at 4.4%. Before you round it off, 4.44%, very, very close to 4.5. So I think that, those things will give them pause, even though the actual jobs number was good. And this is old data, right? When we're talking about August and September sitting here in the second half of November, but it still matters. It's a data upon which, they have to make a decision.
And it certainly moved markets today as well. And I think about the anecdotal in the meantime, with Verizon reducing its workforce by over 13,000 employees, really aimed at cutting 20% of its non-union staff. David, what do you think about the state of the consumer? We got numbers from Walmart that suggest things are good, but I feel like Walmart is almost its own story because of how well it's executing on its game plan. And most companies don't have the scale and the capability to do that.
Yeah, good morning, Scarlett. Yeah, I think that we do need to look deeper into it because we talk about this, I don't know if this is the right way, K-shaped economy, right? This bifurcated economy we have. The upper K is AI, GDP now at 4.1%, 13.1%, just really spectacular, stellar earnings for the third quarter. And then that lower K is the weak labor we just talked about. It's credit card delinquencies running at record highs, auto loan, a lot of personal debt. And that is, absolutely an area for concern. Economic factors that would point towards a recession, a lot of them are there. But that upper leg is so powerful because of AI CapEx. GDP now, the closer we get to the end of the quarter, the more accurate it gets. We're running around 4% for GDP, hardly recessionary. And, I think that that coupled with just, we've had multiple quarters of double-digit earnings growth. And this is setting for third quarter. We're setting a multi-year record for earnings growth this quarter. So we netted out as being constructive on stocks, looking at that upper K, the upper leg of the K, but we're keeping a watchful eye on that lower leg, the traditional parts of the economy that we just keep seeing anecdotal data that should concern us, but the economy and stocks keep rolling along.
I know in the past, David, we've talked about gold and silver. What's your view there on the precious metals? Seem to be more than holding their own here.
Yeah. Yeah. The great thing about gold and silver, and, Paul, we've talked about this. I'm not a gold bug, but we're tactical asset allocators. So, when it makes sense, it's a great place to diversify into. Silver is a higher beta play on gold bullion, and we're even in the miners and junior miners in some of our portfolios. There's just a real opportunity right now because of central bank buying, Basel III, the appeal for individual investors, those concerned about fiat currencies and the future of fiat currencies. And we think gold and silver has a long way to run.
Right.
It has a non-correlation with stocks, sometimes almost a negative correlation. And we love that for the diversification of our portfolio, but we are not sacrificing returns with the kind of returns that gold and silver have this year, and especially the miners.
Yep, absolutely. They've been a stellar performer. David Kula, thank you so much for joining us here. David Kula is the founder, chief executive officer, and CIO at Mainstay Capital Management.